Hello, and welcome to another day of TA the Degen Way. I just wanted to hop on and do an updated video on some recent posts on our TradingView idea page. You'll find this under crypto file 622. Posted probably 4 or 5 setups and have a couple more that I'm looking at. We have Fetch, CFX, Solana, Injective, and Optimism. Also looking at Curve, as it actually has a reason to exist, and IMX. Most of these I'm looking for a small little reset that may or may not happen. One thing I want to get out of the way right away is trading and speculation just simply aren't the same thing. I mean, I have a general thesis that the tide is rising and prices will go up. So therefore, if a person was to buy and hold on to these things, they should expect to make some profit. I mean, that's not financial advice, it's just my own thoughts and feelings. But that's not trading, that's speculation. Trading is more of a highly calibrated system where you're only taking certain types of price action setups that tend historically to have a high probability of pushing up or down at least a certain amount where you can make a calibrated effort for increased gains. Excuse me. It's not something I recommend for everybody. There is a thing called demo trading or paper trading. There's nothing wrong with that. Let's jump right into it. We'll probably only get through 1 or 2 of these today, and we'll jump on and do the rest tomorrow. Let's look at FET. Our Discord group did extremely well on this push. I was only targeting the top of the range, and lo and behold, we broke into the range above 50% of the way. I see this chart. Let's just jump to the regular chart. This is our idea page. You can come and press the play button. This is just brand new from today. On a small little write-up on it, but let's just jump into the regular chart that made that idea. Excuse me. Oh, so what do we have? Our long trade, we were looking at this curvature coming down into a key level there, looking for something bullish. We got in on this first low, pushed up, did very well, got very nervous, but made some additions, and only we're targeting the top of the range. And if we look at this, I view it very similar to the Bitcoin chart. If you go back to our Bitcoin macro volumes level video, you'll see I've broken that chart up into 2 very large ranges. Here we can see this here is about half the size as this one up here. Really, I think the true range up here is not nearly this big, but rather looks to me more to be like this broke into the range below, said no, price pushed up, broke into the range above, said no, pushed back down, and then if we come down here, there's our average macro true range. So our long trade was really only targeting the top of this range, and the rest I just let run. And now I am targeting some form of next move on it as the tide rises. I mean, I personally, in my own capacity, and taking some quiet short trades, but I mean, in all seriousness, the best bet is to let price pull back and hopefully rip again. My current trading idea is to pull back to the bottom of the range and retest this support resistance flip, which would be wonderful. It's also the golden pocket. Yes, I understand I don't have these fib levels flipped going down, showing that retracement level, because I expected to be extra bullish and probably not even retrace the full 50%, maybe only retrace 44% or 1/3. Maybe it only goes to these highs. So I mean, that's why I've left this buy window a little bigger. We got to see what happens. If that's a big if, and that's what I mean about trading versus speculation. Speculation says press the buy button because you believe, or I believe, that price will rise up, really, I'm looking for this 55 cents. But more locally, I'm looking for a 40% rise from this window up to here. And as a speculator, I'd be thinking, well, my goodness, if it's going to go from, my thoughts are 37 cents to 45 cents, that's 10-cent increase. That's pretty good. Good 20% or so. But for trading, that's not trading. Trading is something where you're only looking for extremely discounted rates for the exact, specific, express purpose to take advantage of those fire sale prices. You believe there to be demand pepped up in the market. There's people who want to buy this stuff, but for whatever reason they're fearful because price pumped too far, or there's some bad news, or whatever draws price down. Think about a bell curve idea. Price has pushed up this far. Just assume that it has been overshot and will need to come back. And assuming that is probably the case for trading, I'm looking for this to come back to a significant level. Not this 50% of the way, middle of the road business, where price very well may push to the upside, but that doesn't give me any real indication of strength. I want to see this trend come down and kind of curve into this significant area here. And when that happens, and we get some bullish signals on an oscillator, we can see here on our daily, we have serious bearish divergence, but when price is super bullish, this can just keep going and going and going while these oscillators just ride the top. But that's not trading. That's speculating. Trading is looking for high quality, high probability setups based off of historical price action, reaction, cause and effect. The chart is the final culmination of all buyers and sellers, and the decisions that they make, and whatever reasons they make them is expressed in the price action of these charts. Now, does that mean that you can just read this like a boss and, know exactly what price is going to do? Not in your life. Maybe sometimes, but there's all kinds of outside influences, but you can use it when price does present itself in a way where there's demand for, we're looking at fetch. I believe that there is pepped up demand for this moving forward. I believe the tide is rising. So, I'm looking for a deal on this so I can sell it back. I want price to come down and take a breather, and I want to buy it up, and I want to sell it back. That's trading. So why down here? Well, it's our last support resistance flip. It is also, if we take the fib level and use it the correct direction, we want to know how much of this trend is going to retrace. What percentage of it? 25%, 50%, 75%. So we want the numbers going down. So we'll reverse that, and our golden pocket here is literally this support and resistance flip. Now, I would not like price to break that level. I would like it to consolidate on top of it would be ideal, right in this little range it made right here. This would be perfect. In not even just price coming down here, what we really want is as the trend exhausts itself, and also I'm using a log scale, and I only chart and forecast on a log scale for a very specific reason, because that's giving me a visual display of the candlestick pattern based off of the change in percentage of value only. So when this trend is exhausting and as it's losing value, as that rate of decay changes, this is going to start to curve. It's losing value very quickly. That rate it's losing value a little slower, a little slower, a little slower. until eventually time and price are square, and this trend is exhausted, and I want this trend to exhaust itself at a key level. To me, that's a high quality, high probability setup to make it to a 50% retrace of this high. So for me, this is my target up here, and where did I get that target? I'm assuming this is the swing high, and this is the swing low. So I've taken my fib, and I've gone from here to here, but I've added in 1.5 and 1.618. I'm considering this to be the range that it traveled. I want it to pull back 50% of the way, and I want it to expand by one range. I mean, that's how you get what they call a measured move. Price likes to trade in ranges of equal sizes and equal values. So as price moves up here, knowing the height of this, knowing the depth of the pullback, I can forecast a very likely area that price will most likely rise to. In all seriousness, it can go way farther. From down here, I only targeted right here at just looking for the top of that range. In all seriousness, if we take this range and bring it up here, that is going to be right here. If we pull back to here, and we took this box, that would bring us up here, which is about 40%, I believe. Yeah, about 35-40%, If you get a sniper scalper entry on that, on a high quality trading setup, and treat it like a swing trade, where you're using a little leverage because let's say I decide I want to risk 3% on this trade, and price comes down to my significant level here. I'm looking at this little area. We got this price action here. We're on the daily. Let's go down to I clicked 3 hour. I was looking for the 4 hour. This little block of price action here, price could very, very easily just come down to these highs. Maybe it only makes it back to 32. Maybe I've got this box even a little tight. But what I want is I want this oscillator not to have massive bearish divergence on the top side. I want it to hopefully have some bullish divergence on the bottom side. I'm even going to go a step farther and say, we can kind of follow the curvature of this. And we're looking at possibly about a week or two before this gets a serious mega rip, Maybe that's not correct. Maybe it just keeps mega ripping right now. I got a pretty healthy candle on the 4 hour. What I want is I want price to come down and not just come down nice and steep. This would be ideal. Right there. Nice ABC. Come down to this support level right there. Pop back up to this support resistance level right there. Break through that. But as it's doing this, these lows, I want to have some curvature showing that this rate of decay in this trend, I want to get in. If price is going to pull back, and I think it will, doesn't mean it will. It's more of a if this then this statement. A lot of people get into algo trading and this and that. I'm going to tell you, not that algo trading can't work, because I'm sure it can, and I know it does, but discretionary trading far more effective. Far more effective. So I want these lows as this, say it does something like this, I want these lows to be getting some curvature. When this trend, if we're going to have a pullback, I want to get in at the bottom of the pullback. I want price to kind of round down, telling me that trend is exhausted. So like here's a good example. Look at these lows. And when time and price were square, my friends, the trend changed. You know, let's go up here to these highs. When time and price were square, the trend changed. You know, same thing right here. It's got this. It's not just a nice straight line. It's got some curvature to it. Looking at this right here. See, it's square. You know, I want that trend to be exhausted right here. And so I'm looking for, as a trader per se, you know, I mean, it sounds like a dumb word. I'm looking for price to come to a high quality area where, I mean, I've got a clear stop loss area down here below these lows, you know, where I can say, okay, I'm going to risk 3% of my trading capital. To make it simple, we'll use a round number like $1,000. So if I have $1,000 of trading capital and I'm going to risk 3%, and let's say my entry is going to be, you know, 30 cents. So I've got $1,000. Well, how many shares can I buy with 30 cents? Where really all I need to know is my stop loss and my entry. So if my entry, I'm not going to just pick 30 cents. What I'm going to do is I'm going to let price come down here. And when I think it, you know, when you get a nice wick, you know, wick up or nice good engulfing candle, you got some serious consolidation on top of that main level. Well, I'll say, okay, my stop loss, you know, is going to go down here, and I take my entry. Let's just arbitrarily say it's 30 cents. How many lots can I actually take so that when price comes down here to my stop loss at 27.50 or so, 27.40, when it comes down there, if I'm risking 3%, well, that's $300. How many lots can I take so that, you know, when price comes down here, I only lose a maximum of $300? So for me, leverage, it doesnch mean anything, you know, like people are like, oh, leverage. It's all about position size. I mean, how much are you risking, you know? If it's a high probability, high quality, my personal number is 3%. So, I mean, it depends on my entry, how far my entry is from my stop loss. So let's say my entry is right here, and my stop loss is down here. Well, that's 10%. I mean, that's a long ways. I wouldn't take that stop loss. What I would have to do is I would have to let price come down, and when I believe this trend is exhausted and has genuinely put in the low, say it's right there, my stop loss would go right below it. And then I would say, okay, how much, if I'm going to risk 3%, how much can I take if I'm getting in right here? Oh, come on. I'm getting in right here, how much can I take so that when price comes down here, I only lose 3%. So let's say it's 5% away. Well, that's no leverage. Let's say it's only 0.1% away. Well, that's a lot of leverage, you know. So it just depends on what the entry is and what the stop loss is and how much you're willing to risk on the position. If it's 3% and you get a very tight entry with a tight stop loss, that's a much larger position. And if you think about your risk to reward, even just on a spot position, thinking of this as a swing trade and not like a higher leverage scalp, if a person gets in here, that's the fib tool. Let's grab the risk to reward tool. The only one we're going to get to today is FET because there's too much trading advice in this video. If you like this kind of trading advice, I suggest you join our free Discord. We'd be glad to have you. I mean, that's where I'm talking about my personal trades along with a few others that do a pretty fair job, you know. So here will be our stop loss down here. Our target is, let's go to the lower end of the target box. I mean, that's still a 3 to 1, and even with a 10% stop loss, 10% is huge. But let's say that you need a 10% stop loss. What does that mean? That means that, okay, if I got $1,000 in trading capital, I'm only willing to risk 3%. Well, that's $300. Well, that means if I use my whole stack, I'm going to lose, 10%. I only want to lose, or 3% is $30. I'm thinking of 10,000. That's $70 more than what I should be. So I need to reduce and only use like half my stack or 2/3 of my stack, however much it is, so that at the stop loss and validation point, the risk is only 3% of whatever that trading balance is. But even there, you're still looking at a 3 to 1. But for me, I'm looking to get in real tight, and I will literally set this up where I will get the most largest position size I possibly can, looking for a sniper entry on small time frames. When the bigger time frame comes down here, I think the trend is ready. This oscillator is telling me, that it's ready. It's got some nice waves coming to the bottom side, starting to get a little trigger wave to the upside, money flows rising. I see this trend curving into my level. I'm going to go down to a small time frame, like a 5-minute, 15-minute or less, and look for that sniper entry at that first, real signal, and get in as low as I can with the tightest stop loss and a decent sized position. And I'm going to target this high, from this low to this high, and I'm going to target 50% of it, and I'm going to close half that position, move my stop loss to entry, and the rest just rides on house money for the rest of the trade. And it is, for myself, it's literally that simple. But that's all I got for you. There's a whole bunch of other setups that I posted on there, and that's a big if. Price has to set itself up this way. And that's what I mean about the big difference between speculation and trading. They're just not the same thing. Trading, you're looking for, it's like counting cards. You're only betting when the probability is seriously skewed in your favor. And if you only have, let's say that still only produces a win rate of, let's say 60 to 80%. That still means that 4 out of 10 times or 2 out of 10 times it's still wrong. So that is, and that's using high probability, high quality. And in all seriousness, if you're only trading these macro levels and only when it presents at those in the right fashion, you're probably going to be in the 80 percentile range. It's just that the opportunity is not as constant. They're more spread out. But if you like the content, share, and subscribe. Help out with that YouTube algorithm. Come on over to our free Discord. There's a link in the description, and we'd be glad to have you. But until then, hey, trade well.